We've got mixed signals. Today we're going to be analyzing whale divergences in order flow relative to Bitcoin price. We've also got some key things happening in price action right now based on some revisions, and we'll get into that a little bit too. But today, really, the focus is going to be on this divergence, and I'm going to do my best to explain it to you. Glad to have you with me. Hey guys, it's Keith Allen, and we are doing it for real. Not sure why my music isn't fading out. How about that? We can do it like this. There we go. Oh man, we got a lot going on today, and I'm going to explain what I mean by this whale divergence. This is something actually our community voted on. I gave you guys the choice of what you wanted to discuss today, whether you wanted to discuss this whale divergence or you wanted to discuss what was happening with alts. It was an overwhelming majority leaning towards this Bitcoin whale divergence, really on the macro level. So that's what we're going to focus on today. Before we do, as per usual, first, a nice warm welcome. If you're new to the stream, how you doing? My name's Keith Allen. I am a full-time trader. I am a work-from-home dad, and I am co-founder of Material Indicators. If you're an OG, thanks for coming back. Really, 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 and sincerely appreciate the ongoing support. I do this for you guys. I share the knowledge. You can pay me back by simply engaging with the streams. Do me a favor, if you haven't done so yet, smash the like button, smash the share button, invite some of your friends and fellow community members in, because I've got some alpha to share with you guys today. You're not going to want to miss. And also, of course, make sure you hit that subscribe, tick that little bell up above so that you don't miss any of my future streams, because I share a lot of data and a lot of insight in here that I think you'll find valuable. Let's go ahead and climb into what's happening today. And again, live chat is open, so if you've got questions, I'll do my best to answer them. If you have insights, by all means, please share them. A high tide raises all boats. We all learn together, so keep it coming. And let's get right into what I am referring to in terms of this divergence. And to do that, I'm going to show you fire charts where we have a bin to CVD that breaks up order flow into individual order classes. And from this, we can actually get a bead on what whales are doing. So let's go ahead and share this one right here. And if you're not familiar with it, this is fire charts. What we have up top is the order book, not liquidations, but liquidity resting in the order book. This is limit orders. And what we see down here is order flow. This is market orders, and it's binned by order class. So blue would be true CVD. That's the sum of all orders. We're going to go ahead and take that out. This orange class is the smallest orders, $100 to $1,000 orders. Yes, retail lives there. However, as we've watched the asset class mature and institutional has come on board, we see the whale classes, or I should say institutional size entities, using this smaller order class as well. So it is no longer just retail. There's a lot of times where we see institutional TWAPing going on in that order class as well. Green is the next size class. Again, a mix of retail and institutional in here. Definitely bigger money as we scale up to the red order class, $10,000, $100,000 orders. But for this particular live stream, we're going to focus on these two order classes. The two largest order classes, purple whales, $100,000 to $1 million size market orders, mind you. And then the brown mega whales, $1 million to $10 million market orders, which isn't something you see a whole lot of. So a couple of things to note here. The first thing is that historically, and we've been tracking this since, I guess about 2019, historically, purple whales have had the most influence over Bitcoin price direction. And yes, the brown mega whales are making larger orders, but just in terms of pure volume, and you can see this when I move into a lower time frame, you can see this very clearly. Purple makes a lot more orders than brown does. So just by that nature of frequency, the volume, the overall volume of brown is lower than purple. So keep that in mind. Now, this dump that we're seeing right here, this came right on the news of the massive revision in non-farm payrolls. This is a bit of a knee-jerk reaction. Maybe knee-jerk, maybe not. I mean, I say knee-jerk because it happened right on the news. But the truth is, that's not something that bodes well for the future outlook of the strength of the economy. But that's not what this stream is about. What this stream is about is the divergences. And as you can see here on the shorter time frames, they're much more aligned than we're seeing on this, on this longer time frame. And if we zoom out to just even the last month, you can see this divergence between these two order classes. You can see that purple whales have come off of their lows in terms of what they have bought and sold during this time period, and they're up just slightly at this stage off the bottom. Let's move it to a 6-month outlook. Again, they're off their lows by 2%, while brown is really off of their highs by about 2%. So big divergence there. Now, what does this mean? Yes, there could be a change in the regime. There certainly could. But we're going to climb into this a bit here and see if we can make sense of it. Hey, Wakas, good to have you back. Glad you like the timing. And glad to have you here. So here's the deal. Let's just speak about these regimes for a moment, if we will. These brown mega whales, and in terms of the volume that we're talking about. Okay, remember I said brown trades a lot less frequently, and so what we're looking at here on this normalized view here on Fire Charts, and this is for anybody who wants to know. This is a good explanation of normalized view versus absolute CVD here. Normalized view, this is scaled on a unit of 1, right? From 0 to 1. And it basically means that each order class, in this case, brown whales and purple whales, have bought or sold this much relative to themselves, to their own class. So like what brown is doing here has no correlation whatsoever to what purple is doing here in terms of their volume. It is merely a matter of their own volume. They have retained nearly 100% of what they bought in this 6-month time period versus purple whales, which have sold about 98% of what they have purchased in this 6-month time period. Now, if we look at this in terms of dollar value, we go to absolute CVD, and we can see here that brown whales have accumulated $407 million, whereas purple whales, that $100 to $1 million class, has sold / distributed $1.26 billion worth. So a big difference in the volume between these two. Okay, so that's the first thing you need to be aware of. And that's a simple explanation of normalized CVD versus absolute CVD. So let's go back to normalized so we can see things a bit more clearly. This kind of amplifies things and makes it easier to see these moves. So in terms of the regime, let's think for a moment about what has changed in the past few years. Or the past couple years anyways. And that is the biggest, most noteworthy thing, in my opinion, is that we have a situation where institutions have come in into the crypto sphere, if you will, and they have started buying and selling on behalf of their clients. And so when I see noise on social media about, oh, BlackRock's dumping on you, BlackRock isn't dumping on you. BlackRock is executing what their clients have asked them to do. They buy and sell relative to what their clients want. So if we wanted to look at what their clients want, we could go over here and we could take a peek at ETF flows, and we could see that yesterday was a decent day of buying. And I'm guessing that on this BS from non-farm payrolls, we might see some sell pressure today based on concerns that there is a recession looming. Now, this has been an ongoing conversation for the better part of 3 years now. So take that for what it's worth. The other way of looking at that is that this this change, this revision, this massive revision in non-farm payrolls points to another reason why the Fed could cut here in September. And literally 100% of Fed watchers polled believe that there will be a cut of either a quarter point, 92% think quarter point, and 8% think half point. So safe bet that there's going to be a cut coming on the 17th. Historically, markets like to see cuts, right? So we'll see if the market how the market responds to that, and that could change between September and October because we'll get another unemployment report in early October before the October 29th meeting. So that's just a little bit of insight. Now, in terms of this this regime here, I think that these institutions, and not just the ETFs, but the institutions in general, have started buying and accumulating more Bitcoin than they have in the previous few years. So this is a reason why we're seeing an uptick in brown whale behavior and order flow, and why it is having potentially more influence over price. Now, the divergence that I talked about isn't just between these whale classes; it's also on what purple whales are doing relative to Bitcoin price. Now, it is a smart money move to sell when price is going up. Smart money buys when price is going down and sells when price is going up. Okay. So that part doesn't scare me so much. But looking at things relative to where we are in the cycle is what has my attention. And so this situation here, I think that we're going to continue to see brown mega whales, if you will, continue to accumulate, and at least until we have a confirmed cycle top. There's speculation on whether or not that has already happened, with an all-time high of 124K. I personally think that we're in an interesting situation here where price has briefly broken below the trend line, but held these important timescapes, and the most critical ones, in my opinion, are the yearly open, and of course anything around these moving averages has additional strength. So we were nosing up against resistance here yesterday and this morning until this non-farm payroll news came out, and now we see this revision, and price is broken below the 21-day moving average. That's not a sign of strength, and and we're coming off of a death cross here, so we could see more downside. We could see more short-term distribution, especially because of this news, and we're seeing that on the low time frame scale where we saw a sell-off here. Now, but look what's happening now, right? Purple whales are buying. They do more so than the brown. Purple does buy dips and sell rips. Okay, so there's a lot of trading action going on in here as well, and that's exactly what we're seeing right now in this moment. If we look at the weekly, we can see, again, we now have resistance here that has come down on us. Not a ton, but where we were sniffing up around 113, we're now working to fight back above 111. Let's just keep stepping out to higher time frames and see if we can gain any more insight from this. So in terms of where things are headed now, and I almost wish that I had done this before we saw this this NFP revision, because that's triggered some short-term reaction out of the market. But there has to be a turning point at some point. And maybe we're already there. Maybe we're not. Okay. Now, when did this begin? And this is worth noting here. You could say that some of this distribution from purple came around May 22nd. But this was already a local top around 112K. We then kind of double topped up in this region. So it would make sense to have some distribution in here. It's when price bottomed on 622, which is June 22nd, that we really saw the divergence, because price began to appreciate from here, right? Price went back up from 98K. Price started climbing. But here's where we're seeing the real divergence out of this purple whale class. So are they viewing this as a distribution event? It's clear that they are, at least in this period. It's clear that this is distribution for purple whales. But when is the turning point? Did we just hit it? Or is today going to bring us back down because of this non-farm payroll revision? That's something that we're watching. And of course, with a looming, almost certain, if not almost certain, at least very highly probable rate cut coming on the 17th, will that rate cut be the catalyst for, will it be a sell the news event, or will it be rocket fuel for the cycle? And we can speculate on whether it's going to be a quarter point or half a point. I think it's, the consensus, at least on the survey here, leans heavily towards 25 basis points. If it were 50 basis points, would the market then be spooked that, hey, maybe things are worse than we thought? So that would be a concern I would have, and something that I would be watching very closely. If we get this quarter point, I think that the market likes that news, at least for the short term. It's what happens after that, right? Even if we get on a cutting cycle, it's the reason for the cuts that could spook the market. If the reasons are massive spike in unemployment, and to be fair, we did have a little bump up in unemployment here at the beginning of the month to 4.3%. If we see things going up to 4.5%, that would be concerning, and higher, obviously, very concerning. So these are all things to pay attention to. And what we must watch very, very closely is how purple whales react to what's happening, especially in terms of these macro events. So like I said, they're just 2% off the bottom at this point. So was this the turning point? That's what we're watching. Will they go lower from here? Will they bottom out again and make a new zero? Or will they incrementally climb their way back up here? Now, I want to show you something else that I thought was very interesting in terms of where that divergence happened on the order flow with this price action, right? So we know that March 22nd, something interesting happened. We had a death cross between the green 21-day moving average and the purple 200-day moving average. And that is notoriously a horrible sign. Notoriously, that is a sign of a breakdown in the market. And so, and on the weekly time frame is where it's just, rock solid. But this is not a good sign. And of course, we had more downward momentum. We had that April tariff announcement, and things really got nasty. But this was a nice bottom, a double bottom established, and we started to see a nice recovery here. So and these moving averages have unwound since this point. So price has recovered from this, obviously, and gone way, way higher. Now we're in a situation where we're wondering how these moving averages are going to behave, because we have again seen the green 21 death cross the red 50 and the blue 100 day moving averages. That does not leave a lot of room, especially since we're now below this trend line. So this is indeed concerning. Over the weekend, I had said I was looking to see price recover the trend for the weekly. It came close, but we got rejected. And now on this news, we're seeing that rejection back below the 21-day moving average, which now leads me to believe we could see another retest of support at these timescape levels. And this bottom one, the the Q3 open is the one that has the most confluence in terms of consolidation and a local bottom here. So whether that gets reestablished, validated down here, whether it holds up here, or maybe we break down and go lower, all of these things we need to be watching very, very closely here over the next couple of days and heading into the rate cut. Now, my expectation is this event today, which was largely driven on economic news, is going to be, like most of these things, a speed bump in the road, right? Annual revision, $911,000, nearly $1 million. That was a pretty significant miss. There was a pretty high target forecasted, still a significant miss here, and I think the largest since like 2002. So, we don't really know how much to trust the data out of the BLS, especially now that we have a president who likes to put his thumb on the scale, and he may be doing this at this stage to force the Fed chair to cut rates. Who really knows? All we can do is react to what happens, not to what they say, but to what they do. So keep that in mind. We got to watch that very, very closely. And then in terms of how things develop, we need to be watching these metrics, because if things are pointing, for a long time, we've been talking about the strength of the economy, Yes, there's recessionary fears, but strength of the economy has kept markets very, very high. Crypto market went to new highs. Stock market went to new highs. So these are all things that we need to watch very, very closely, because this is the early, going to give us early insights of whether there is an increase in recessionary fears and how the Fed is likely to respond. So these are all things that we need to, again, start watching closely. So let's keep that in mind. Now, in terms of what we're seeing here on fire charts, again, I'm focused on what's happening, and I think it's important to not necessarily be hyper focused on what's happening in low time frames, but to zoom out and see how things are developing in the higher time frames, right? Just on the weekly versus the daily, you can see that there's a difference, right? We bottomed out on this news, and now have bought back 42% of what they sold. And on the weekly, you can see that there's actually been buying since I don't know, 4 or 5 days ago. And on the monthly, what does that look like? It's basically just coming off of the floor here. So whether we see more degradation or we start to see appreciation and accumulation, or I guess I could rephrase that as whether we see more distribution or more accumulation, is what we need to be watching very, very closely here to get a gauge on how price is likely to react. Hope that gives you some insight. If you're looking for more, I strongly encourage you to join our Telegram community. There's a link to it in the description. It's a free community on Telegram. And of course, I'm posting on X every day as well. So join us in that Telegram community. We're talking about this stuff every day. So again, we welcome you to join us there. And if you want some info or insight on some of these tools that I'm sharing with you, you'll find links to the description there as well. If you haven't done so yet, make sure you share this stream with somebody and hit that subscribe button so you don't miss any of my future streams. Hope this helps you trade smarter, my friends. Have a great day.